Morning Navigator newsletter. Hey, Tony.
Maggie, what's happening?
What's happening is Nvidia, I think, right? We had stocks kind of mixed to flat, but it seems like everyone is waiting for the big event. Nvidia is going to release its earnings after the close. Uh, the CEO is going to be doing some press as well later on. Uh, Gosh, it feels like there's so much riding on this. How do you think this is going to play out, or how are you thinking about this release?
I tell you, I'd argue that the market has been preparing for a week for this news release. Literally, if you look at market performance over the last week, one of the biggest movers is Nvidia. Shocking, it's off 9% ahead of earnings today. But also on the downside, we've got Bitcoin coming apart 9%. And then all of those subsectors of technology that broke out with the Trump election, software, cloud storage, cybersecurity, social media. In mob parlance, momentum got whacked ahead of this Nvidia report, and I think that it's actually the market quite overreacting. And I'll find out in a minute because I have last sale and Nvidia in front of me. But quite honestly, I feel like it might be the market overreacting to the DeepSeek news from late January. Right, that's the news that derailed Nvidia's bull market rally, sent it off 20% from the highs on a billion shares into support. The stock came roaring back again. There's another sell off on a quarter of a billion shares down to the moving averages to a higher low. Stock came roaring back again. And I just have a feeling that people are expecting a bad report and a bad reaction out of NVIDIA. And I would argue that the bad reaction has taken place over the last week. And no matter what they report, the stock's going to be fine. I don't know if it's going to go up two or down $2, but overall, the stock is going to be fine. So unless I'm proved otherwise, and I could trade my way out of that too, but unless I've proven wrong and Nvidia opens up down 25% tomorrow, earnings are a horrible miss, the market's not taking it, then we'll readjust sales. But if you ask me, I can point to and draw a circle around all the selling that took place ahead of this.
Yeah, the good old priced in, right? It's already priced in. Hey, Tony, really talking to your mic, and I'll turn my volume up a little bit because lots of folks, hey, everybody in the chat, are
Okay.
saying that they can't hear us. So,
Okay.
technology, these things get so sensitive, people, that they're just, it's a struggle. It's a
Yeah.
struggle that Tony and I laugh about all the
Yeah, we
time.
do, right? Oh
Yeah.
my God.
But yeah, if you keep it right there, that'll help, I think.
I'll take care of that.
So yeah, exactly. I always think of Kevin Muir. Do you ever do show Kevin Muir? He like talks right into that
He's the
mic.
best. Yep.
The macro tourist, if you're not familiar with him, folks. He has a great Substack. Okay, so you think it's priced in. It seems like I had quite a few people who are coming on though, just sort of saying, hey, Mag 7's over, right? It just got so overextended and it just feels like there are better opportunities elsewhere. There seems like there's this sort of kind of negative sentiment around not just Nvidia, but that whole space that was kind of related to the AI bubble. But we've been here before, right? We've been here where people have doubted it and then it's come roaring back. Does it feel like it might be different this time?
Well, being unsure which way would be the different way. I'm going to tell you this. This is my thought. Coming into this, the market sold off fairly sharply, but it was no brand of a crashy agnostic sell-off, right? Where everybody's just like, "Oh, get us out of here." It was very clearly a deleveraging of the biggest stocks in the most popular sector of the market, most of which have double and triple levered ETFs attached with them,
Mhm.
right? Like, so that's where the bulk of the damage has been. So when rates are flying, rates are backing off sharply, bonds are flying with the idea that there could be an economic slowdown in the background or a little bit slower than we anticipated, and rates are falling and tech is falling at the same time. I'm going to say that you can probably ring fence that circle around the technology market and say that tech got over its skis, right? Because you look at the last week and you've got sectors like consumer staples, healthcare, and home construction are in positive territory with, the S&P off. How much is the S&P off on the week? 3% in the last week. So there are trades that are seeing the capital flow into them. It's not the kind of thing where it's like, get us out of everything and get to cash, right? It's, we have too much semiconductors on. We should have some of this on. We don't have any airlines on. We should have some of that on. Social media's gone berserk. We don't have any of that on. 20 days in positive territory for Meta, right? Stuff like that. So that's kind of how I'm perceiving it, Maggie.
Hmm. Hmm. We have a bunch of questions. I'm gonna go through some of them because they're really good, and I know we will kind of keep a half an eye on to see. I do want to caution though, right? We know that they're going to come out with the headlines, but lately, especially when it comes to Nvidia, I feel like so much matters on the conference call, like what they're saying about the future, what they're seeing about capex spend.
Right.
So I'll just say whatever move we see is likely to continue to kind of rocket around here a little bit in the next couple of hours as this happens.
Volatility has this thing priced in at moving 8% in either direction after the bell.
Wow.
It's $9, $10.
Wow.
Might move both
That
ways.
yeah, both ways. That's why everyone's
Exactly.
been nervous, right? That's why people said, "I can't stand it. If you can't stomach the fact that it might be 10% down, get out." I mean, I
Yeah.
heard people talking about that.
Yeah,
So,
that's the
and
right
that's
answer.
real. So, okay, let's see. This is a comment from JJ, and I think this is interesting, and it kind of sums up what some people think. The whole Mag 7 trade depends on Nvidia's earnings every quarter. Hardly sounds like something to hodl from here. I do think that people worry that the tech rally is so concentrated in such a few names. Does it does Have we seen any kind of rotation into other types of names, Tony? Like the concentration was so hot, so much in those 7 stocks. Have we seen any kind of diversification or any kind of move into like the next phase of AI? Or this is really about those mega names?
I don't know. I don't know that you can, draw a circle around where the money flow is going that's coming out of Mag 7 other than it's being dispersed and deployed in all different ways. Like I can't say that it's going directly into another sector. Obviously, all of a sudden, staples have woken up out of the blue. Home construction is rallying because rates are down big in the long end, but not nearly as much as you would think that sector would be rallying. Maybe because it's swimming upstream against the S&P tape broadly. Um, but I'm not looking at it exactly like that, Maggie. I think that what the market's responding to is the massive amount of change on the economic landscape and the uncertainty of like what the administration is going to mean. Like, I don't think anybody understands the actual degree or pace at which the markets and economy is going to change under the Trump administration. And maybe I'm overestimating him or something like that, but I do feel like what DOGE is doing is unbelievable and can be really, really bullish treasuries. I mean, they've clearly changed the complexion of the treasury market. And Scott Bessent has done a good job with that. So, I'd hate to fade a move like that if he's talking about, well, what Jared and I spoke about on our Macro Dirt podcast today was that in Trump's first administration, he targeted the stock market, right? He was like S&P new highs, bro. Like that was his thing. Now this admin is sort of indirectly, not through Trump, but through Bessent, talking about the bond market, right? And that he wants lower rates. And so, that's how they are possibly managing this. Maybe that's first and foremost of the importance to them. Maybe they think that rates need to get lower for whatever, all of the machinations that they're putting in place. So I feel like lower rates is eventually going to be the reason that whatever Mag 7 sell off is taking place. And like, why can't something pull back from being extended over its moving averages into its moving averages within a bull trend? But I have a feeling that that's what's going to happen to Mag 7 is that a lot of them are going to pull back into trend and retail is going to be there same as it ever was. And next thing you know, the S&P is back up above all the major moving averages and shorts are covering and we're at the highs again. That's what I could see happening.
Yeah, it's a great point. It's been a relentless march higher. So, the idea that you would have some consolidation would make sense. Great point, by the way, about the focus on the bond market and rates rather than stocks. I don't know if that means they don't care if stocks go down or just that the impetus is to really sort of focus on that. You, by the way, I don't know if you remember, but at the very beginning of this, I don't know if he was actually won the election at this point or before, but you said to me he's not talking about this in the early days. He's not talking about the stock market. He talked about the stock market all the time, but he's not talking about the market anymore. You pointed that out, and it had, even though he went down to visit, which I thought was interesting, it is not that same, at least vocal. But there's so much going on. I don't know if that's intentional or
It seems like Basent has got a big plan sort of related to the monetary system, right? I'm the last one that can probably enunciate it, but they make an allusion towards lower rates. We're talking about having a strategic Bitcoin reserve, which is going to help manage the treasury market, and he's got massive reissuance to deal with. It just sounds like that, these guys have got a grand plan for that they need to execute on, and they're starting by managing rates lower. And that's all I know.
Yeah. Yeah.
Literally all I know. So I got to
Yeah.
try to roll with the punches.
Yeah, Scott Bessent is certainly one to watch. He is such a critical figure in all of this. So let's take Boris's question next. Great questions, everyone, too. Uh, uh, Boris says, "Hi, Tony. Hope you are well. Might it
Boris,
be the
what's up?
right time to switch part of the portfolio from U.S. equities to European equities, as those are fundamentally considerably cheaper?" This has been a big talking point lately. Is the U.S. Uh, well, some of it is US exceptionalism over, but others are just, is it time to rotate out of the US?
So the way I interpret that call, because it's super popular right now, is that everybody thinks that because we changed administrations, it means necessarily that we've got to stop overperforming the other markets, right? And for me, that's like people throwing pebbles at a tsunami, right? This is a slow moving secular trend that doesn't break on a daily basis or on a weekly basis, right? This is a slow moving trend that morphs over years and decades. And when you look out the window, there's sure damn good reason for the US to outperform a lot of the other markets. And if we're finally going to true up the tab here on everybody else and they're going to all have to pay their way, then the US might just continue outperforming the other countries, right? And maybe that slowly starts to change, but it's not something where I feel like I've got to be like, "Oh my god, get me out of the S&P and buy the DAX." Like that is absolutely not the right way to look at this trade if you ask me. I mean, over
People have been
time,
doing that though, right? I mean, the DAX, Chinese equities, there
into
definitely
China,
has
yeah,
been.
yeah. Maybe they think that this administration is the turning point, and maybe because they believe in this big giant Costanza trade, where the most business-friendly president becomes the worst president for the markets. And I've still, the way the markets have been behaving since he was elected, they're telling me that's still not the case. Even if we back off a little bit now, like I can deal with that. Positioning is extended. Sentiment maybe got a little bit bullish. We failed to break through the highs 4 times. Of course, we're going to pull back. I can live with all that, but I'm not abandoning ship on a bull market in equities during the Trump admin yet.
Mm. So so Jared's asking a question that is impossible to answer, but I think we're going to just flip it and tweak it a little bit. He's saying, what is the percentage of stocks to hold in a portfolio if we're seeing the beginnings of a correction? Where to move into? Maybe money market funds as dry powder. Thanks. We can't answer it because we don't know your situation and your risk tolerance, and we don't give financial advice specifically. But I do understand the nature of the question, so maybe we can rephrase it. What would cause you to become more defensive, maybe less willing to hold equities? What would be the trigger for you, Tony? And if there was one, would you move into something like metals or gold, or would you go into cash to just wait for an opportunity to get back in?
You know, that's a great question, and it deserves a really thoughtful answer. And I think the way I would look at it, I would need for the dynamics of this bull market to turn on their head for me to say, okay, let's change our allocation and get out of equities and I would get into something probably like treasuries, I would think, given that's what the admin is telegraphing. They just started telegraphing it a week ago and the market moved 3%, right? So like there's plenty of time for that trade to develop and keep going. So I would think that that would probably be a good place for capital. And I feel like that's where capital has gone in the last week. I mean, TLT is up 4% in the last week. And then you've got consumer staples, healthcare, and home construction that are in positive territory in the last week. Everything else has gotten sold to the point where those tech subsectors are off 8%, right? So the rotation is happening, right? There's a little bit of that rotation going on. Whether this derails the bull in the stock market, I mean, I'm a technical guy, so I would
Mhm.
have to see, like I'd have to see like real waterfall stuff like we saw during lockdown, where we see several negative days in the S&P negative in a row, like 5, 6, or 7 out of 10, things like that. Huge magnitude moves, huge low downside extremes on the tick index, which means that there's agnostic selling. Those are the days where every sector on the board has to be in negative territory. Like those are the things that lead you to believe, like, okay, this equity trade is blowing up on me, right? Or it's beginning to blow up on me, and I need to move. So until I saw signals like that, and I've got room on the downside because I have room in the trade. You know what I mean, Mag? Like we've been in this for a while. We've been riding this bull, and we still have plenty of time. And if I give up 20% from the highs, life's a bitch, right? You don't get to tell where your trades go. You just get to act on the markets when they move, right? So that's how that works out. And so I would, those are the things, like I need diagnostic stuff. And you may say, well, by then it might be too late, and I'm going to tell you it's not going to be. By the time we pick this up and get out of our positions and my book is flat, there will still be downside in the S&P. Like we'll be out early, and that's the last thing I worry about.
That's a really important point because I think everyone, based on the questions, and not just in the chat, these are great questions, but just generally, like there's a lot of concern, and people, I think, feel like it's almost like trying to time the top, right? Like to get out like before the turn comes. But then you don't know, right? That's the problem. So you're saying you're not worried if there's some selling. You'll see what's coming, and then yes, maybe you skim a little off the top of your profit, but that's okay.
Well,
You
we've done things like already gotten into and out of software along the way. We've gotten into There were huge trade, 25% in like several weeks. We've got into and out of Bitcoin, bagged a 35% trade along the way. So now we've gotten into financials and into commodities, and I've got trailing stops on those positions. And, as soon as I get a chance, I move those positions to break even. So I'm getting out like before any kind of catastrophe happens. And knock on wood, that's been one of the saving graces of running a view matrix in my newsletter, is that people get ideas on how to make money and also the timing on how to save money. Like I got a lot of props for getting out of Bitcoin at 95K, because I was saying the odds of this thing having a large magnitude slide from here are increasing by the day. Every day that it doesn't take out the high that it made while Trump was getting sworn in, it's in danger of having a downside. So I said, okay, let's get out now. And if it goes up $1,000, I don't care. I don't know the timing, but I know that the odds are increasing for a slide to the downside. And then we got it the other day.
Yeah. Are you still expecting, since we're on Bitcoin, are you still expecting, uh, it to continue to go down? Like, where would you be a buyer again somewhere? I think
Yeah.
someone just in this, Jared just said, "I'm a buyer of Bitcoin if it hits into the 75K territory."
Totally. Absolutely. Matt, I look at it like this, every markets are really symmetrical to me. So it can do one of two things. It's got this big, long standing double top with the top of the range around 110, and the bottom of the range is at 90K, right? That's a $20,000 range. If that's the range that it's been consolidating in and breaks violently to the downside, expect it to pull back $20,000, right? The same distance from the middle of the range to the top as the middle of the range to the bottom now. So somewhere around 70K. Well, before it gets there, certainly, because it's Bitcoin and you never know if you'll see the price again.
Mm,
That's kind of where I scale down, buy it, and take a shot.
yeah.
And so no matter what, you got to use some kind of a pullback to get off the zero boundary, I think. And then you keep in mind that if the whole thing is just a money laundering operation for USAID, then it's going to go to zero, and you better be careful.
I had a feeling, Tony, you're gonna squeeze that in there, Tony. Uh,
It's Cuppy's call. It's not even my call. I'm going to give Cuppy credit with that because I think there's a more than 20% chance that might be right.
oh gosh, I'm not even gonna go there, but thank you for warning me because I'm talking to Cuppy in a couple weeks, so I'll
Nice.
know not about that though, not about
Ask
that.
him about it. Ask him what he thinks.
So, I wanna get, another one of these questions in here, and that is, I can't find who did it, my apologies, who asked it, but wait, but this is one though. Someone said, "What's the Costanza trade?" Are we talking about George Costanza and it's like the opposite? Is that what you're
Yes,
talking? I had a
we
feeling.
are. It's kind of like almost like the Murphy's Law, but for trading, is the Costanza trade, right? Here's an example. Solar stocks were an unbelievable Costanza trade into the Biden administration. solar stocks, the solar ETF TAN went from 30, marched its way all the way to $80 as it looked like Joe Biden was going to win the last election. Then he won the last election. While he was being sworn in, the solar ETF traded its all time high, right? He's about to put down electric vehicle mandates. We're going green all over the place, solar to the moon. It never looked higher than Joe Biden's inauguration day and is now back to $30. That's a Costanza trade, right?
Okay, that makes sense. I had a feeling, from Seinfeld, George Costanza, I had a feeling that it was having something to do with him,
Maggie, by
but
the way, Nvidia is 136 bid. So it doesn't look like DeepSeek was that tremendous a shot to the bow. And I'm going to tell you, this thing is going to get back on its bullish horse before anybody realizes it.
which will be very interesting given all of the negativity heading into that.
We'll see. Just my opinion. I could be wrong by morning.
Well, we'll see. We got a question, and I will figure out who asked it, but my apologies. But about gold, um, how are you feeling about gold here?
Gold is doing what gold should be doing. You know, it's reaching, it's tapping new all-time highs. It's still in a bull market raging along. Sentiment hasn't really redlined. I don't think that many people are talking about it broadly speaking. Look at this, Maggie. 127 offered now, Nvidia. Holy smokes, this thing is toxic. But anyway, it's holding the range that I needed to hold for my positive scenario to play out. But gold, I think that to me, gold is a trade you've got to stay in because of the trend, but you got to sit up in your chair if it starts convincingly breaking the trend around what Scott Bessent and what DOGE are doing,
Mm,
right? Scott Bessent wants to grow us out of our deficit, or at least try to grow us in that direction. He's talking about reprivatizing the economy, right? These things are like really, really bullish for treasuries, and that may cause a lot of money to go into treasuries and come out of gold, right? So I like worry about that. If treasuries start performing and get out of this bear market and go into a bull market, God forbid, that could take some funds away from gold if central banks step off the buying gas, right? The chart will tell us if that happens or not. So I think that there's a little bit of risk to gold because gold was responding to all of that sort of death of fiat currency porn, right? Like $37 trillion deficit in the US, massive deficit spending, like everything is responding to, oh my God, fiat currency is just getting torched here. And I feel like, that may end during this admin and maybe gold is sideways for a little bit, but it's been an unbelievable run. The breakthrough from 1800 to 3K has been a totally tradable move.
mm.
And until that trend breaks, I'm not going to give up on it. But I see
Yeah.
risk. That's fair.
Yeah, there have been I just wanna flag, there have been some really interesting things going on with gold. Not only has the price been moving up, but we've been seeing some, things happening in the market about delivery. There's been a lot going on. There's a lot of talk of the audit of Fort Knox, like, a lot of headlines on this, and maybe Elon Musk is going there. I jumped on with, JJ, who writes Alyosha's Substack, and he
Best in the
has
business.
been, yes, you know him. He is a long time gold trader, among other things, really, really experienced in the market. And there was he felt like a lot of noise, a lot of misunderstanding, a sort of lack of a detailed conversation about it. So we jumped on to clarify a couple of things, including he wanted to just point out the narrative has kind of moved from an inflation hedge to people actually wanting to possess the gold. They are asking to own it, which is super interesting. And the idea of auditing it, while a very good one, is very entailed. It is not that easy. He gives a complete explanation of what would need to happen for that. But he made this really interesting point. I'm going to attempt, folks, to play you a clip from him. We'll see if this actually works. But he made a very important point for those who have sort of toyed around with the idea of maybe we should revalue it and maybe tap it a little to help pay down the debt to get that under control. He feels very strongly about safeguarding that national reserve of gold, not thinking about it in the same way as a strategic petroleum reserve or anything like that. He thinks this isn't a class by itself. Let's have a listen to this if it'll play. Let's see.
If we took all the mined gold for 2.5 years, the whole world all at once, and all the enterprise it took to create it, and we took all of that gold, that's what it would take to replace it, right? You cannot buy 250 million ounces of gold. No one will sell it to you. It's dispersed. It's all over the world. And many of it is much of it is in places where they don't have sophisticated financial products for people to save money, particularly in Asia, India, and so forth. And so they're never going to let that gold go. So the loss of our gold would be a catastrophic, irreplaceable loss. So the focus on making sure we know what it is, what it's worth, and who's looking after it is a very important enterprise.
Yeah, I think it was really important for him to say that. That's up on Substack, folks, if you want to go take a look at it. And JJ has written about that as well in his.
You know what I think is really important to point out to some of your listeners, if they're not familiar with JJ, that if you're not reading and subscribing somebody that is been in the markets for half a century, you're missing out not only on their expert perspective, but on the literal education that he is handing out in his newsletter every day. And so that's just something that I have to endorse while I have a moment, because I read that thing from the first word to the last word every day and learn something almost every day. And I've been doing this for 35 years.
Yeah, really well said. Actually, if you want to learn about his past, I did a stories from the floor with him. You can look; it's back on the YouTube channel here. You can go and check it out. He has some really epic stories, and he doesn't even tell half of them. Sometimes he writes about them in his Substack, but he's a very humble guy, so he doesn't like to name names, but really fascinating. And it's so true. It's institutional knowledge, Tony. That's kind of
Yeah.
not as easy to get your hands on, and he's very generous about sharing it. Yeah, so we'll put his link in for the Substack in there as well in the description for everyone, so you can check it out. And it's only there. We're it's not on YouTube. It's only on Substack. Someone asked, are you looking at any other metals aside from gold?
No, I'm really not. I haven't been really excited about any of the metals trades, and base metals certainly, they've been one-way traffic opposite the dollar. There's no great supply tightening or anything like that, or demand explosion that I know about. And price doesn't really reflect that. The miners came alive for a little while and then kind of petered out. That sector isn't exciting me right now, Mag.
Yeah. So what do you as we sort of kind of start to wrap things up. We're not quite at the end yet, but I'll try to get a couple more questions in. But are you? What would you say you're most convicted about now, Tony, or what's most interesting to you? You look like you're sort of bucking the negativity trend on tech, and you're watching bonds because you think that's where the focus of the administration is. Is that a correct categorization?
Yeah, I keep trying to look at the market against the backdrop of what's going on in the news, because I think that the world is changing, dramatically. I think the national attitude is changing dramatically. I think it's really important for my bullish view to continue to see, like, relevant entities plowing large sums of money back into the US to give me confidence in this trade. Like Apple just announced, a $500 million worth of US based investment. And for whatever political reasons that is, that matches Saudi Arabia and Masayoshi Son's, investment into the Trump administration, US. And those are the things that are going to ignite animal spirits once changes start taking place and people start feeling the benefit. And I feel like the markets are always ahead of that. And they probably just got, you know, for an entire quarter of knowing that we had Trump at the helm into, this Nvidia hiccup. It was one way, the market was just gyrating around 6K or 6,100. And eventually what's going to happen, I think, is that earnings are going to speak for themselves, and we're going to break the top of the ranges in all the indices and go on a bull market run. So
Hmm.
really nothing has happened to change my idea. And now, especially on this side of Nvidia earnings, for me, like I said, that all Nvidia had to do was show up sober to get through this earnings report. And I feel like they did that. It may come in down $20 tomorrow morning, and I'll be proven wrong at that point. But if it doesn't, and it's within the recent trading range, certainly, I'm going to say that the market is going to have a much better chance of getting back on its feet on the other side of this. So, we pointed out, we started off the show, Maggie, by pointing out everything that's gotten decimated to the tune of 6, 7, 8% ahead of this report. I'm very anxious to see what the weekly performance is 1 week from today. So I got a feeling that there's going to be big rebounds in those sectors and probably some strength in a few other sectors, because the market's got this albatross off its back now. And I don't know, I'm not giving up the bullish ship just yet. No way.
Awesome. Tony, it's always so fun. I don't know. We always get together on a day where there's some big thing happening. Well, I didn't even know when we put this on the calendar that Nvidia was coming out today. So
So
it was
great.
so
It's in the
great to
cosmos, Maggie. We're supposed to be covering this shit. It's
I
important.
know. I know. But it was so great to have you
For
on a day
sure.
like this. So we'll see what happens overnight, but appreciate you always, Tony.
I appreciate you having me and giving me a platform to talk about markets, Maggie.
Awesome stuff. Thanks everybody for the great chat. If you're a holder of Nvidia, hang on. We'll see what the night brings. And we will be back with you on Friday. We have Jim Bianco, so join us for that. In the meantime, everybody, take care and good luck out there.